In today's video, we're going to talk about Redfin's latest housing market update that was actually just posted today. So let's talk about home prices, housing inventory, price reductions, and much, much more. I have a lot to share in today's video, so let's not waste your time. I appreciate you guys for joining me, and let's begin. Just posted on November 14th, which is today. I'm posting this on November 15th, which is probably most of you guys watching today's video. Anyways, I want to share this because in general, I don't really share their analysis so much, but I actually do not agree with their analysis right here. It says early indications of home buying demand show that buyers are returning after taking a hiatus in the lead up to the last week's presidential election, which was on Tuesday, November 5th. Redfin's Home Buyer Demand Index, a measure of home tours and other home buying services that Redfin agents are helping clients, that actually increased by more than 15% this past weekend, keywords past weekend, to the highest level in nearly a year and a half. Please note that this is based on only 4 days of data from November 7th through November 11th, and we won't know for a few weeks if this increase is a blip or the start of a new trend. My takeaway regarding this, or my opinion regarding this, is that I don't extrapolate any data that's only 4 days long in order to formulate a conclusion about what's happening in the housing market. 4 days of data really doesn't tell us anything at all. So I don't really think it's fair to reach any conclusions based on a small range of data that they're reporting here. Instead, I'm going to share how the changes in pending home sales, a measure of closed home sales in the coming months, how that is changing over the past 2 months. In any case, mortgage rate locks, these are people who are buying houses in which they locked in their rate. So in other words, you get your offer accepted, maybe a couple weeks later, you can lock in your rate. And approximately 80% of these people, by the way, turn into a closed home sale. So just because you lock in your rate doesn't mean you're automatically going to be buying the house. Their pull-through rate, according to this data from Ultimo Blue, is at 79%. So in any case, people who are locking in the rate to buy houses using a loan more than doubled from a month earlier as of November 12th. And that is this right here. So let's focus on rate locks for home purchases, of course. And this is as of November 12th. And again, like I mentioned, the pull-through rate is around 80%. I believe it's like 79 point whatever, but rounded up to 80%. This means that only 20% of these people who have locked in their rates actually back out or the sale is not finalized. In contrast, this means that around 80% of these will become a closed home sale. So this is very much a late indication of future closed home sales in about 1 month's time. Anyways, their current value of 129, this means that the 7-day average, the percent increase, is a giant increase of 63%. Compared to 4 weeks ago, their purchase index increased by a whopping 104.2%. So more than doubling compared to 4 weeks ago. Also, just on a side note, here's what really caught my attention as well. Look at people who are doing a cash out refinance that increased by 68.9%. And 4 weeks ago, rates were much lower than the rates we're having today. That's just telling me that people are kind of strapped for money. So rather than selling their houses, they're doing a cash out refi in order to pay off credit card balances, for example. So getting back to Redfin's report, it says this jump in early stage buying activity reflects pent-up demand that's now being unleashed. It says here, pending U.S. home sales rose by 4.7% year over year. Again, this is a measure of people getting their offers accepted, home buyers writing offers, they get an offer accepted. That's a new pending home sale. That rose by 4.7% year over year during the 4 weeks ended November 10th, in line with the increases we've been seeing over the past 1 month. So pending sales are a lagging indicator. If this week's uptick, again, 4 days of data, in early stage demand continues, pending sales are likely to improve sometime in the next several weeks. Again, I do not rely on 4 days of data. Instead, I'll share how the trends we're seeing this week or this last month based on this weekly report, how that compares to 2 months ago. Because looking at the 50 biggest cities, we're seeing a lot more cities in which they have more pending home sales compared to 12 months ago. So that's the demand side. Let's have a look at the sales side. So new listings were unchanged from 1 year earlier. So exactly the same number of new listings compared to 12 months ago. That's the first time in a year that they haven't been an increase compared to 2023. In fact, let's look at that really quickly, which is right here. New listings in the spring home buying season were up by about 10 to about 15% for much of the year there, or much of the season there. And ever since really like late summer, we've been seeing this kind of downturn in new listings, which is seasonal. That's normal. But this last week, it was flat compared to the year prior to that. Quite a bit different compared to the bigger increases we saw to start the year. So what does this all mean? This means that we're seeing fewer people listing their house for sale, which of course is causing inventory to actually lose momentum as well. In fact, according to Redfin, active listings or inventory levels are actually going down right now and posting the smallest increase in a year in quite some time. Now, speaking of that, let me actually just share that with you guys right now. I was going to share it later, but let's take a look at that since we're talking about this. So here is this year, and of course, the blue line is last year. So this last week, we're up by only 12.47%, so about 12.5%. That's actually the smallest year-over-year gain going all the way back. Wait for it. The 4 weeks ended March 17th this year, when the gain was only 12.13%. And also, at basically 12.5%, this is much less than the over 20% increase we saw during more or less April through the 4 weeks ended October 6th this year. Therefore, just kind of taking a step back here, we're seeing a lack of people listing their house for sale. And let's take a look at that again, looking at the past several years. So as you guys can see, the level of new listings right now, flat, more or less in line with last year as well as 2022, but still lagging behind 2021. At this time in 2021, there was just under 92,000 new listings. Now this year, there's only 78,000. Now here's what we're also seeing as well. Let's take a look at pending sales over the past couple of years. Of course, it's way below 2021. So new pending home sales are up by 4.7% year over year, have been in positive territory ever since really September this year. Prior to that, we saw a decrease of pending sales for much of this year compared to last year. So to summarize here, we're seeing new listings basically losing momentum. We're seeing more pending home sales compared to most of the year. And this is causing inventory levels actually going down. But it's actually normal also as well to see active listings kind of trickle down this time of year as our housing market kind of moves into the slower time of the market. But the data right now we're seeing right now is showing that pending sales are increasing at a faster clip than new supply in the market. That's causing inventory to decrease. So speaking of that, let's have a look at the measure of pending home sales for each of the 50 biggest cities, how it compares to new listings, and also how this compares to 2 months ago. There's some very big changes right now. So pending home sales actually increased in 37 of the 50 biggest metros. So much of the United States has an increase of contracts being signed compared to the previous 12 months. Now looking at 2 months ago, there was only 13 metros that were up. Now there's more than double that at 37. So an increase of pending sales, at least looking at the 50 biggest metros. Now the biggest increase was actually in Virginia Beach, Virginia, up by nearly 19%. Then we have Portland, Oregon, up by 18%, Dallas, 17%, same goes for San Jose, and San Francisco is up by 16.5%. In contrast, we have Fort Lauderdale, Florida, down 15.2%, Miami down by 14%, West Palm Beach, Florida, down by 14% as well, Jacksonville, Florida, down by 9.5%. Do you guys sense this trend? Tampa is also down by 7.2%. What's pretty crazy about these stats that every single one of these top 5 cities is located in Florida. They're seeing a big increase of active listings. So in other words, they have a lot more house for sale, yet pending sales is actually going down. I just want to double check this for you guys. Have a look at this because here's Fort Lauderdale, Florida, according to Redfin's data center. Again, looking at pending sales, that's down by 15.2%. But take a look at this. Active listings, the amount of houses for sale, look at that. Giant increase up by 37%. So even though there's nearly 40% more houses for sale, pending sales are still going down. This, by the way, is at least a 4-year high during the same time frame. So for example, this time last year, there was about just under 12,000 houses for sale. Now there's nearly 16,000 in Fort Lauderdale, Florida. I'm also guessing that houses are taking longer to sell there as well. Let's kind of like take a deep dive in this really quickly. Here's days in the market. Yeah, look at that. So days in the market, 81 days. That's an increase of 27 days compared to a year ago. 1 year ago this time, it was taking about 54 days to sell a house. Now it's at 81 days. I'm also guessing that the sale price to final list price ratio is probably going downward here. And there you go. It hasn't really moved very much actually over the past couple of months, but it is at 96%. This means on average, houses are selling for about 4 percentage points less than the seller's asking price. At this time last year, it was at 97%. One thing I will mention though, this is a lag indicator based on a closed home sale. So I have to see if this trends downward in the coming months, given that inventory is absolutely skyrocketing there and demand is actually falling. All right, let's get back to Redfin's report. So pending home sales increased in 37 of the 50 biggest metros, right? And of course, 2 months ago, there was only 13. Now, let's take a look at new supply in the market or new listings that decreased year over year in 21 of the 50 biggest cities. In contrast, 2 months ago, there was only 11 cities that were down compared to the previous year. This means that we're seeing fewer new listings, at least looking at the 50 biggest metros compared to 2 months ago. So taking a step back again, we're seeing pending home sales increase in more metros, but we're seeing new supply in the market actually increasing in fewer metros. So if you guys want to see home prices absolutely tank, the metrics are basically moving in the opposite direction, at least what we're seeing so far this year. All right, before we share some more metrics, especially home prices, let's talk about some lead indications of our market. So based on the daily average as of November 13th, according to the Mortgage News Daily, that rose to 7.01%. That's very close to the highest level since July this year, but down from the 7.13% rate we saw about 1 week earlier. These are based on average rates based on a survey from the Mortgage News Daily for people with exceptional credit buying houses for 25% down. Buying their first house, this is not investment properties. Anyways, according to them, we're right around 7%. However, according to Freddie Mac, this is basically a weekly survey that they post every Thursday. So according to them, for the week ended November 10th, about 4 days ago, we're at 6.79%, the highest level since the week ended July 11th this year. Meanwhile, people who are submitting loan applications to buy houses, that increased a tiny bit compared to a year ago, up by only 1%, but it did rise by 2% compared to the previous week. And of course, this is from the MBA. And like I mentioned, Redfin's home buyer demand index rose by 8% year over year. But touring activity is down 3% compared to the start this year. But at this time last year, we were down by 15%. These numbers have actually improved though. So go to showingtime.com. I'll provide a link below, of course. So for the week ended November 13th, we're actually down by only 1.6% compared to the same time frame or compared to the first week this year. At this time last year, though, we were down by 16% compared to the start last year. So an improvement compared to the previous report that's being shared by Redfin, down by 3% compared to the start of this year. All right, let's change gears slightly here and talk about home prices based on the median sale price on a national level. This is basically for more or less 400 plus US metros that Redfin tracks. And of course, their data is subject to revision, and their weekly data goes through 2015. So in any case, the median sale price on a national level is just over $387,000. That's up by 6.2% year over year. That's the biggest year-over-year gain since October of 2022. So prices are still rising, which is pretty astonishing given that rates have been increasing. But I'm guessing that some of this data includes sales in which rates were much lower then than they are today. In other words, this is lagging data, of course, right? Also, let's talk about the monthly mortgage payment. That's $2,607 per month at a rate of 6.79%. That's down from last year, but very close to the highest level since July this year. Let's have a closer look at this over the past several years. So again, we're up by 6% right now. This year, it has been paid at around 3 to about 5% all year. But prices basically moving the opposite direction here compared to what we should be seeing, because prices in general tend to decrease once we hit the early fall months. So we're up by 6% right now. At this time last year, we're up by 4%. 2022, at this time, we were up by 4%. And we saw a giant increase in 2021, up by 13% from 2020. What we should expect to see for the remainder of the year is that home prices should level off very, very soon. And we should start seeing kind of a leveling off or decrease in prices for the remainder of the year. And this is due to seasonality effects of our market. Now, taking a look at pending sales, again, it's up by 4.7% year over year. And new supply hitting the market is unchanged compared to the previous year. Like I mentioned, every other week this year, new listings have been higher compared to the previous 12-week period. So new listings basically losing momentum. This is probably due to the fact that mortgage rates are increasing, and therefore a lot of people who own houses are less inclined to sell and take on a much higher rate than they have today. This is, of course, because a lot of home sellers become, of course, home buyers. Now, looking at inventory levels, that increased by only 12.5%, the smallest increase since March this year. The month supply is at 4 months, a small gain compared to 12 months ago. And according to them, a month supply in the range of 4 to 5 months is considered balanced. I would say around 4 months is probably considered balanced, maybe 4.5%. So we're kind of moving towards the buyer's market, but we still have a little bit ways to go, at least on a national level. Every market's different. Areas that have a lot more houses for sale from pre-COVID are areas in which buyers have an advantage over home sellers, but much of the Midwest and the Northeast have a lack of houses for sale, and therefore it's still a strong seller's market in most cases. Let's also talk about how fast or how slow houses are selling right now. So the median days in the market, this is a time frame when a home gets listed for sale until they accept an offer from a home buyer. That's at 41 days. So this means that on average, houses are taking about 7 days longer to sell, which is contributing to the rise of inventory, even though inventory is going down right now due to seasonal effects and a lack of new supply hitting the market. So in any case, houses are taking a longer sale right now by about 7 days. And this has been a kind of a similar trend ever since really May this year, when houses are taking longer than 2023, which is the orange line right there. Like I mentioned in previous videos, this is much different compared to January through April, when houses were taking faster to sell from last year. In regards to the sale price to final list price ratio, that's at 98.7%. This means on average, for all the houses that did sell, they sold for 1.3 percentage points less than the seller's asking price. That is right there, more or less in line with the same time frame 2 years ago, slightly below last year, but still way behind 2021, when at that time, houses on average were selling for about a half percentage point over the seller's asking price. And now again, they're selling for just over a 1 percentage point less than the seller's final list price. With that said, if you guys want a real estate agent referral, then please email me at jason@meetjasonwalter.com. Or if you want to buy a house in the greater Sacramento area, my team and I would also love to help you as well. You can email me or check out my website, which is realestateteamfinder.com. Thank you so much for watching today's video. Please like and subscribe. I appreciate you guys so much. Have an amazing day, and we'll see you next video.